Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at what happened as far as the global markets were concerned. Basically, the US markets were stable in trade. Europe did well for itself, and most of the Asian markets are doing well for itself. And that's also reflected in how the SGX Nifty is behaving, because the SGX Nifty has managed to inch up by almost 40 points in open. So there is a positive traction that we can expect when we open for trade today. The ADR is not the best of days for the ADRs because they reflected what happened in trade yesterday. So Tata Motors was down 11%. Reflecting what happened here. ICICI Wipro as well as HDFC Bank were down in trade. The big gainer was Dr. Reddy's because that too in India was doing well. It gained up almost 3% there. The Nifty had a bad day. In fact, it was doing well, but a sudden drop that came in the last half an hour of trade, so selling pressure that came in. So the Nifty was down 0.5%. Traction was also seen on the mid cap and small cap on the negative side. Even the Nifty Bank saw a sudden selling that came off, and the Nifty Bank from a positive move to almost a negative 90 points. The PSU index was also down over 1% in trade. What did well was the pharma sector. Dr. Reddy's contributing significantly, and media ahead of these numbers. He was up 4% in trade yesterday, so there was traction that was seen on Z also. As far as the worst sector was concerned, and that was clearly auto. Tata Motors was down 13%, and that was reflected in the Nifty Autos index being down almost 2%. FIs, DIs have been the net buyers. FIs have been net sellers, but this time around the MTD, if you're looking at it, the FI sell flow has been much higher than what DIs are buying this time around. As far as the Nifty contribution is concerned, the Nifty was down 50 points. What contributed positively was HDFC, Bajaj Finance, TCS and Dr. Reddy's. Reliance as well as Tata Motors were the two counters because of which the Nifty saw heavy selling that came in. As far as the F&O market is concerned, what we're seeing is that there was long unwinding that was seen on the Nifty. Open interest was down almost 4%. As far as the Nifty Bank is concerned, there too long unwinding was seen. Open interest was down almost 7% in trade. If you're looking at the open interest, where open interest build-up is seen, the 10,000 calls puts our open interest build up of almost 41 lakh shares open interest that's there, so that's the big support. And from levels of 10,000 to 10,300, put writers are much more aggressive. Even they're writing in at levels of 10,500, and call writers are active from 10,400 to higher levels. Yesterday, since the market fell down in trade, there was a little bit of selling that came in, or unwinding that came in because of put writers. Call writers over the past few days have been aggressive. They've been writing from levels of 10,400 to higher levels. As far as the banned stocks are concerned, there are no stocks in the F&O ban. The PCR for the Nifty, the Bank Nifty, was rather stable in trade. I want to highlight four stocks which actually saw a lot of traction. So there was a long unwinding that was seen on Tata Motors, was down 13% post a weak commentary coming in as far as as far as Jaguar was concerned. The other counter that I want to speak about is Titan. Again, open interest build up of 7%, the stock down 8%. One of the last consumer companies to start cracking. The third company I want to talk about is Just Dial. Fresh shorts was seen, open interest build up of 12% on the short side. And the final stock that I want to see is Canfin Homes, open interest build up of 5%. The counter saw an uptick of almost 4%. So these are all the domestic cues. Let's go across to Paul Allen for all the top international headlines.
President Trump has renewed his criticism of the Fed, saying policymakers are moving too fast with rate hikes. He dismissed concerns about inflation and repeated his liking for low rates. Fed Chairman Jay Powell remains on course for gradual tightening in the foreseeable future, with markets expecting another hike in December. President Trump greeted September's increase by saying he wasn't happy. Indonesia has a blunt message for global financial chiefs as they prepare to meet in Bali, warning they must be more mindful of the spillover effects of their policies on emerging economies. The rupiah has weakened to 1998 lows as US interest rates rise. Finance Minister Sri Mulyani Indrawati told Bloomberg that Indonesia is being punished despite doing the right things and reforming its economy.
We do hope with the Bali environment that everybody, policymaker from the US, China, the Europe, Japan and other emerging country is going to have a much more ability to agree in restoring confidence in the market and the global economy, and have the commitment to cooperate to navigate this changing of global environment.
Luxury leader LVMH has confirmed that China's demand for high-end goods remains strong. Sales of Vuitton handbags and Dior perfume rose 10% in the third quarter, extending the sector's recent surge. Investors have sold shares in LVMH and rivals such as Kering in recent weeks over concerns about the volatile yuan, the escalating trade war, and speculation about a customs crackdown on luxury imports. The top US auto commentator says the world is a long way from seeing self-driving vehicles and robo-taxis on the streets. Wes Lutz is chairman of the National Automobile Dealers Association. He says there simply isn't enough data to prove one way or the other whether autonomous cars are safer. Speaking to the Automotive Press Association in Detroit, he said, "We've reached peak absurdity on the subject." Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
I think what we have been saying since March, that we will be tightening of the oil markets towards the end of the year, is unfortunate, I should say, materializing. And this is not a good news for the global economy. In fact, not only the oil, but also coal and natural gas prices also going up. And I can tell you that it looks like expensive energy is back. Expensive energy is back at a bad time again, when the global economy loses momentum. Yep. Currency crisis in major emerging countries and trade disputes among the major economies. So high oil prices is not a good news for the global economy, both for importers, yeah, consumers, but I believe also for the exporters. If not today, maybe tomorrow.
Okay, but so you think it's tighter than a month ago, if I'm correct?
Definitely so, because of the demand is still very strong. Yeah. And we have been losing oil from Venezuela in big amounts, and also Iran is going down.
This is crucial. When does it start hurting demand? Is it in the fourth quarter?
We are going to soon, in a few days, releasing our monthly oil market report. And if not in this report, I'm sure in the next year's report, my colleagues may well give a second look that it's going to hurt the demand. We will see slower demand growth because India, for example, one of the major drivers of global oil demand growth, their economy is hurt badly.
Yeah, but so you're not seeing signs of a slowing demand yet. Where do you think you'll see it first?
I think emerging countries, and I will put, for example, India, China, Asian countries. India current account deficit is badly hurt here. The fiscal deficit of India is doubled. And in fact, leave aside these numbers, the current Indian domestic prices are equal to $100 in terms of the rupees. So it is because they lose a lot of value.
Are you satisfied in how Saudi Arabia and its allies are responding to this? Should they be putting more oil on the market to make up for the lost production?
We are losing production from Venezuela big time, and Iranian exports are going down, and the demand is still strong, and we really need more oil. What Saudi Arabia did is an excellent move, coming from about 10.7 million barrels per day, but we need more oil to come to markets, to comfort the markets, especially in the fourth quarter this year.
Well, stock of the day today is Graphite India on back of the development that the company has decided to hold the operation of its Bangalore plant till November end. It's going to be sequentially phasing out the furnaces by October end, and the entire revamp work is expected to be completed by November end. Production loss by the company is expected to be compensated or covered by production other units or the other plants that the company has right now, and it expects the production level to remain unchanged even after this development. To give you a little background about where we are coming from, Karnataka State Board Pollution Board recommended the company to shut down the unit post the inspection, post the concerns over the emissions beyond a permissible limit, which led to a lot of observations. But then the company quickly took remedies thereafter. 3 out of 4 observations, apparently according to the company's filing, were corrected by October 1, and this is the 4th one which the company is currently trying to address. Let's look at the locations right now that the company has. It has a total of 98,000 MTPA capacity. Durgapur, it has 54,000 capacity. Germany around 18,000, and for Bangalore it has around 13,000, and Nasik it has around 13,000. So clearly the Bangalore plant at 13,000 will take a hit, and that will be compensated by the capacities that we have locally, that is Durgapur and Nasik. Also, if you look at the brokerage, which has actually BofA ML has actually initiated a buy rating on this counter with a target price of around 1,550, would suggest a potential upside for more than 96% for this counter, which is huge. If you look at what the brokerage has to say about the company, it says that the company is the cheapest graphite electrode maker globally, which trades at a multiple of around 1.9 times. It expects the net profit valuations are not currently priced in. It expects a record high profit for the company for this year as well as next year, expects strong cash flow, and sees higher shareholder return for the company. At that point of time also, it has suggested 3 risks primarily for the company, which includes easing of Beijing's pollution norms, which has led to benefit for this industry as a whole, faster than expected industry capacity addition, again a key risk, and the shutdown of Bangalore plant, which at this given point of time remains to be a site which remains unclear. But nevertheless, the brokerage has priced in a 7% cut in its target price on account of this closure.
Let's now get your check on the commodity space, starting off with oil prices, which have seen some bit of rebound come about in the overnight session, largely on account of Hurricane Michael, which has in fact shut down more crude oil platforms in the Gulf of Mexico. On the back of this, the IEA has also sounded the supply concerns and requested OPEC and its allies to boost production as much as possible. But shifting focus to the base metal space, the index itself snapped its 4-day fall. But aluminium was unable to recover any of the losses and in fact posted its biggest 4-day decline since late April. Copper and nickel also gained most in over 2 weeks, while we had zinc, which snapped its 2-day fall, and lead declined for the 5th straight day. Now, if you look at the Shanghai Futures Exchange, most of these base metals are in fact trading with a positive bias, especially zinc, which is up more than 2% in trade. Lastly, as far as gold prices are concerned, we saw some bit of uptick come about in the price of gold on account of IMF cutting its outlook for global economic growth, and that's the reason we saw safe haven buying.
Well, in stocks to watch, you have NNC India, where the board has approved a buyback of about 9.28% of the company's equity paid up share capital, aggregating to 1249 crores. The buyback price has been fixed at 88 rupees per share, and that's a good 19% premium to yesterday's closing price. So that's a stock to watch out for. Nalco will consider share buyback on October 12th. So that's another stock that you need to watch out for. You have Healthcare Global Enterprise, that company's associate company has signed an agreement to acquire the India medical diagnostics business of Quest Diagnostics. They haven't disclosed the financial terms of the deal. Nevertheless, they've said that the transaction will close by March 2019, and then it will add to their portfolio in North India. So it will improve their North India presence. So let's see how that one reacts. You also have PNB and PNB Housing Finance, which should be in focus, and that is on the back of an ET report which says that Carlyle and PNB have dropped their plans to sell stake in PNB Housing Finance, and that's largely to do with the valuations for these housing finance companies dipping. So the negative development for PNB, which had to raise funds, and of course this had been an overhang for PNB Housing Finance since a long time. So let's see how that one, those two react. You also have Diwan Housing Finance, and this is on the back of an ET report which says that the housing finance lender may have sold loans of about 5,000 to 7,000 crore to SBI. So let's see how that one reacts as well.
State Bank of India on Tuesday said that it is tripling the amount of loans that it intends to buy from non-banking finance companies. Now remember that for SBI, as being the largest lender in the economy, buying loans is not a new business. This is something that SBI has been doing over the years. especially over the last 1 year, it has been actively buying loans from banks which are under the prompt corrective action framework of the Reserve Bank of India. And because of this, the loan book for SBI keeps increasing on a quarter-on-quarter basis, apart from the lending that it naturally does. But especially in this case, the loans that it's buying from NBFCs is important because the NBFC sector, is currently facing some sort of a liquidity crisis, primarily because of a spate of defaults that were reported over the last 2 months by Island FS, a highly rated company that eventually went into default rating because of these defaults. Now, because of Island FS's defaults, the cost of funds for all NBFCs has gone up by at least 100 basis points over the last few weeks, and therefore they're finding it more difficult to borrow funds from the market. And therefore, if SBI were to buy these loans from the NBFC loan book, then they would have more capital available for further lending. Now, SBI on its part may be taking on slightly more riskier loans, because typically NBFCs lend to customers which banks do not lend to, and therefore the asset quality for SBI may see some sort of impact over the course of this financial year, but that is something that we will get to know by March 31st, 2019.
The Indian government has asked about 19 banks to pay tax of over 15,000 crore rupees for free services that they provide to customers who maintain a minimum balance account. This case is being pursued by tax authorities despite a clarification issued by the government, which said that free services will not be liable to tax or GST. The tax authorities have asked these banks to pay up GST and service tax for the last 5 years on free services that they provide to minimum balance account holders, and the 15,000 crore worth of tax liability is expected to go up to about 35,000 crore rupees if penalty and interest is included in this. The reason tax authorities are giving for this argument is that banks do earn an income from the deposit that these account holders maintain in their account, and now they've decided to tax the agreement or a commitment that a bank enters into, where it says that it will provide certain services for free for account holders who maintain a minimum balance account. The value of the tax would be derived from the penalty that is charged on customers or account holders who do not maintain a minimum balance account, and this penalty has been equated to the value of these free services that are provided by banks. So the tax authorities are asking banks to pay up tax on that penalty amount for those customers who do not maintain a minimum balance account, as well as those customers or account holders who maintain the minimum balance account. Some of these banks who have been issued show cause notices are HDFC Bank, which has been asked to pay up about 6,500 crore rupees in tax, which does not include interest and penalty, followed by ICICI Bank and Axis Bank, which have been asked to pay up 3,500 crore rupees and 2,500 crore rupees respectively. Besides this, tax authorities are also collecting data from about 7 banks and are expected to issue show cause notices asking them to pay up tax on these free services soon.
Okay, it's the start of the Nifty earnings season with Zee Entertainment reporting its numbers today. We are seeing the top line growth of close to 17%. EBITDA will also grow in the same level. We're seeing a 17% EBITDA growth. So that means EBITDA margin will be pretty much stable at close to 31%. Profit, we're seeing a dip of almost 32%, and this was on account of an exceptional gain that the company had last time around. Now, there are several factors. First of all, the ad revenues, as well as there will be high ad revenues on a lower base last time around. Viewership has been decent for them. There is an increase in ad spends because the FMCG sector has started to spend, and they are actually giving a lot of ads. The new OTT platform ZEE5 is something that is contributing and will add to the top line of the company. And content cost is something that will actually have an impact as far as margins are concerned. And because of an exceptional gain last time around, profits will be seen lower this time around. Certain things that we need to watch and ask the management. We need to ask them about the ad and subscription revenue growth. How is that coming? What's the margin guidance? And they've come off the high 30% to close to 30%, whether the margins on guidance will remain. What's the investment in ZEE5? What's the growth outlook there? What's the original content for the company? And what's the international launches? So these are the questions that we will ask the management once they come out with their numbers.
Let's now look at some of the stocks to watch based on yesterday's delivery, buying and selling. The first stock on the list is Dabur India, which was down about 4.5% in trade yesterday and saw delivery selling in excess of 130 crores. The delivery volume surged as much as 85% as the total volume surged nearly 80% when compared to its 5-day average. Second stock to watch out for, Z Entertainment, ahead of results. That was up about 4.5% and saw delivery buying of nearly 150 crores. The delivery volume surged about 75% as the total volume surged about 63% when compared to its 5-day average. Last and final stock on the list, Dr. Reddy's. Now, this was up about nearly 5% in trade and saw delivery buying of 116 crores. The delivery volume surged 60% as the total volume surged just about 30% when compared to its 5-day average.
On Tuesday, the company had a large hardware event that had been planned months in advance to launch its brand new high-end premium Pixel 3 phone meant to compete directly with the iPhone. The company also announced a new tablet with a keyboard, as well as what it calls the Home Hub. So this is sort of like the Google Home Assistant or the Amazon Alexa, but with a 7-inch screen that can actually show you the weather, show you YouTube videos, instead of just talking to you and answering your questions. This is part of the company's play to really get deeper and deeper into people's homes and compete directly with Amazon. Google's pitch is that it wants you to put a device like this in every one of the rooms in your home, but of course, with the security questions hanging over the company, consumers may be asking whether that's something they want to do or not.
Several stories available on the website for you to look at before trade starts today. Here are just a couple of them. Moody's Investors Service has called the Indian government's decision to cut the excise duty on petrol and diesel credit negative. It said on Tuesday that this would likely lead to a widening of the fiscal deficit by 10 basis points to 3.4% in the current financial year. And Nikki Haley will leave her job as the U.S. ambassador to the United Nations at the end of the year. President Donald Trump has said this that this announcement came as a surprise, and the White House. It also led to fresh speculation about her political future. She insisted, however, that she would not run in the 2020 election and would instead campaign for Trump. That's all we have for you on this edition of All You Need to Know. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.